Hello, this is Squander Invest. So the Chinese, they just imposed 34% reciprocal tariffs on imports of US goods in retaliation for Trump's trade war. And yeah, the Chinese, they're basically hitting back at the US after the US, they placed well above 54% tariffs on the Chinese. So the Chinese, they're quite smart because what they do is they tariff basically a select few items where they have some sort of economic advantage in. So for example, your agricultural products, your fuels, and taking action against certain American firms and ramping up export controls. So this is sort of like a tit for tat between these two countries. And until the 9th of April, the 10th of April, I don't think we will see some sort of resolution between these two countries, and that is why we will see a lot more downside from here on. And the fear and greed index is currently now at around 6 already. In fact, we're lower than the COVID levels. The COVID levels was around a 10. Now we're currently at 6, and the lowest point was in 2022 when we hit a 3 in the stock market. So we can clearly see a lot of fear in the markets right now, and this may not be a bad time for you to buy into the markets. The markets are now down 2.6% after hours, pre-market trading, and we're down around 15% from all-time highs already. So over here, the stock market is down around 14.5% from all-time highs. The QQQ is probably in a bear market already. So after today, the QQQ, it will be in a bear market, yes. So QQQ, it is at its lowest point, it was in a bear market already. So the US market right now, they're pricing in some sort of a recession because over here, the 10-year yield is tanking. So we were at 4.8% a few months back before Trump came into office, and now we're at around 3.8%, which is close to the lows that we had in August when we had the recession scare. So the bond market is pricing in a recession already, and yeah, with the jobs data coming in as well, which is stronger than expected, this could lead to the Fed cutting less and prolong some sort of economic downturn that we will see in the market. So the 10 minus 2-year yield, it usually happens. Basically, the recession usually happens when the 10 minus 2-year yield curve hits around 0.5 and starts steepening from there. And we're now at around 0.35% already. So yeah, we could start seeing a lot of steepening ahead. And when the steepening comes, that's when the recession comes. And currently on this Fed watch over here, the stock market is pricing in around 5 interest rate cuts for this year in 2025. So yeah, if we see 5 interest rate cuts, then likely we'll be in a recession already. And that is when you see the markets falling 20-30% from all-time highs, which is what is going to give you the massive buying opportunities that you want to have. So for me, I think the trade war is far from over. The trade war just got started because you got other countries like your EU that hasn't responded yet. So far, the only big gun that has responded is your Chinese. What about your EU? What about your different other Asia countries like Japan, Taiwan, and all that? All those countries could retaliate and hit the US together as one banded force, and that is when you will see actual pain in the market. So for now, I am just buying on the dip. I am not planning to deploy a lot of my cash because the stock market could go down a lot more from this point. This could just be the start, or this could be the bottom. No one truly knows, but I'll be buying on this dip, and hopefully I can get some discounts. So over here you can see let's say Amazon. Amazon is a company that is hit quite hard because it is importing a lot of its goods from China. So over here Amazon is down around 6% after hours pre-market trading, after being down 8% yesterday, and from all-time highs it is down around 30% already. That is crazy for a stock like Amazon. So Amazon is a extremely high quality business, and currently it is down around 30% from all-time highs. That's just crazy for a stock like Amazon. I think we can see a lot more downside from here, maybe until $120 or so, or testing this low at around $150. That will be where I'll be looking to add even more shares of Amazon. You have companies like Meta. They're not really impacted by this tariffs at all, but they are selling off with the markets as well because the market is relentless. The market will sell off all the Mac 7 stocks together, and it is down around 30% from all-time highs already after hitting $740 earlier this year. You have companies like Google as well. Google is also not impacted by tariffs, and yet it is down another 2% after hours. Now it is around $148 already. So it is down around 28% from all-time highs already. And yeah, we could see a lot more downside all the way until $130 for this stock, which is testing the 2024 lows already. So yeah, I think the market is not stopping. We will see some form of bounce soon, but not so soon. Don't get caught buying this dip on the way down. I mean, if you want to buy the dip on the way down, be prepared to hold it for a very long term. That's what I'm planning to do as well. And yeah, even a company like Microsoft is down around 25% from all-time highs already. Yeah, that is just crazy. Then you have companies like Apple, basically all your different Mac 7 stocks that hit extremely hard. So Apple over here is down another 5% from after hours trading, and it is down now around 25% from all-time highs already. So all your different Mac 7 stocks, they're getting hit extremely hard, and the markets It doesn't look like stopping. The next support I think will be at around 5,100 dollars, and then the next one will be testing the 2022 high, which is around $4,800. That is where I expect the stock market to rebound if we ever see a rebound. But for now, the near term is bearish. I'm looking to add, but I'm not adding too aggressively as well. I currently have around 43% cash position. I'm hoping this stock market goes a lot lower so that I get more buying opportunities, maybe at around 4,000. That will be the best point for me to add into my positions. Hopefully you found this video useful, and yeah, just invest safe.